Welcome to the second in a series of webinars on the SASB sector series. We're going to talk about the services sector today. This is Michael Kinslick, head of the standard setting organization. I'm here with Sonya Hetrick, our services analyst. We're going to take a quick review of SASB's approach to standard setting, and then Sonya is going to go deeper into the services sector, the standards, and then we'll review next steps in our process and leave some time for Q&A at the end. SASB's process for standard setting starts with materiality. We take the Supreme Court's definition of materiality and look at issues affecting corporations and how we can develop standards to represent those issues so that companies can report on them in a standardized way for investors to get meaningful information. That definition of materiality suggests that the exclusion of a piece of information would alter the total mix that an investor would have in front of them. Our standards are built to be material to the topic at hand, decision useful to investors, and cost effective for companies to prepare and present. We start at the bottom of this pyramid on page 5 with an evidence-based approach, going industry by industry and getting information from the market about what is material. We look at the topics of interest, the potential to affect value creation. Are they relevant for all companies across an industry? Are they issues that a company can take meaningful action to do something about within their organization? And then we look at how we represent those issues in a specific metric that can be measurable, verified, offers comparability across companies. And that allows for standardized presentation of this information across companies within an industry and then even across industries in the entire economy. The SASB standards are designed for inclusion directly into the Form 10K or 20F. We include both specific metrics and how to represent them in a technical protocol along with qualifications for discussion and framing of those issues in a qualitative setting. Our process started with, and Sonya will go into this a little bit later, but we started with a broad across all kinds of information out in the market, public filings, editorials, periodicals, looking at total interest across these issues. Then we took those broad issues and looked for evidence of financial impact for companies around those topics from a valuation standpoint, because the evidence of materiality requires both the evidence of interest and the evidence of impact. We then vetted those issues in this sort of sieve process with broad participation across the market through our industry working groups, and then validated this through investigation into disclosure across companies. And we found that broadly about 75% of companies and investors agree that the issues and topics that we're addressing are material. And then finally, we look at specific analytic approaches that will help us validate the impact of these issues. These are the kinds of topics and issues that you'd see in the news every day, and we look at the different levers of impact for those issues. So a couple of examples here, nutritional content for revenue for restaurants. This is something, you know, as consumers become more health conscious, they want to see healthier choices on the menus that in the restaurants they're eating at, and that can affect given companies' opportunities for revenue growth or the opposite. Similarly, another example, fair labor practices for hotels. Companies that mismanage this issue could face higher turnover, which can be costly for training, morale, strikes, which can have reputational costs, and other issues. And now I'm going to pass it over to Sonya for a deeper look at the services sector itself.
Thank you, Michael. I'd like to encourage everyone, if you have questions throughout, feel free to submit them. We'll be taking all the questions at the end, but go ahead and submit them. So the services sector is very diverse. There are 10 industries which can be grouped into consumer and business services, hospitality and recreation, and media. When we look across the industries, we see two main themes that emerge. Environmental capital, specifically energy management, affects many of the industries such as hotels, casinos, restaurants, leisure facilities, which is mainly theme parks, cruise lines, and cable and satellite. Customer welfare is also a very important issue, and it can be expressed in different ways. So for-profit education companies, they need to be ethical with their marketing and recruiting. For casinos and gaming, responsible gaming is an important issue. Restaurants need to both offer healthy food and look at food safety. Cruise lines and leisure facilities are concerned with customer safety. Media companies have to protect data privacy and security. So customer welfare, as you can see, is expressed in different ways across all the services industries. Looking at the current state of disclosure in SEC filings, we can also see variation across the different industries in the sector. So what this graph shows is for the top 10 companies in each industry, with the exception of cruise lines because there are fewer companies there, what are companies reporting in their 10K? So the red bar is showing no disclosure at all. The salmon-colored bar shows boilerplate, which is generally not very helpful to investors. It might be vague or not very specific. Industry-specific contains more useful information, and the highest quality of disclosure is the metrics. Again, we can see a range of performance, and what SASB is working towards is to get more of the dark gray and the lighter gray bars so that investors can compare performance across companies. Taking a closer look at advertising and marketing, we also break out the state of disclosure by each of the topics that SASB has identified as material for an industry. So for advertising and marketing, we have advertising integrity, data privacy, and workforce diversity and inclusion. As you can see, there's not very good disclosure on the first and third. Their companies are doing a little bit better about talking about data privacy, but still it would be helpful for investors to have metrics, especially comparable metrics. As I mentioned, SASB is working to improve disclosure effectiveness. So we're trying to move from an example, as you can see, for the cruise lines industry, fuel use and air emissions is an important topic. And this is an example from an actual 10K filing where you can tell the company is aware of the issue on the left and is probably doing some things to address it and manage it, but it's not very clear. In the middle, you can see another example of a company which is trying to use some metrics related to this topic. So that's probably more useful, but again, is it comparable across companies? And how is the company working to try and meet or exceed regulatory requirements? On the right, we see the SASB metrics, which are very specific and, as Michael mentioned, include a technical protocol. So we can ensure that all companies are reporting in the same way, as well as activity metrics for normalization. That might be the number of passengers per year or other kind of size and activity metrics that you can use for normalization. Looking at the provisional standards for the services sector, These have been out since April, and we're currently in a period of deep consultation on them, so we'd love to get your feedback to see if we need to make any tweaks before they are finalized. This slide shows the topics. You don't need to look at the details here, but just to kind of, it's helpful to see how there are 5 types of capital that SASB looks at: environmental capital, social, human, business model and innovation, and leadership and governance on the left side of the screen. And then, as you can see, the topics we identify as material really vary by industry. Although there are some common themes, we do see under social capital, again, a lot of issues related to customer welfare. And energy management shows up in a number of industries. So this slide shows, something we develop when we're creating the topics and metrics. We look for evidence of interest and evidence of financial impact. So HM is for the heat map score, and it is a scale from 1 to 100, basically looking at the relative importance of the topic based on different keywords in 10Ks, 20Fs, shareholder resolutions, legal news, news articles, other things. And then IWG, that's the industry working group. That's the percentage of participants who thought the topic was material and should be included. So in both these cases, the percentages are well above our 75% threshold for inclusion. EI is the overall evidence of interest. You can see here energy management was medium, customer and worker safety was high. Under evidence of financial impact, that shows how mismanagement or proper management of the issue could affect the company's income statement, balance sheet, or cost of capital. This slide shows how you can start with the disclosure topics, and then SASB selects the appropriate metrics that will provide fair representation and a complete picture of performance. To go from the metrics and think about what kind of financial adjustments you might want to make to the company's income statement or balance sheet to account for their sustainability performance, you would look at the type of metric. Is it quantitative or qualitative? What's the time horizon? Is it prospective or retrospective? You would look at how likely is this impact to occur? Is it acute or chronic? And then also the magnitude. Is this a medium or low impact? You may want to look at other things as well. Those are just some examples. And you can see this example for nutritional content for restaurants. We have a metric about meal options consistent with the dietary guidelines for Americans and sales from those options. So that would be a quantitative metric that's more of kind of a looking forward metric, although it is about the past as well. A metric like fines and settlements would definitely be retrospective. This one's maybe in the middle. And as Michael discussed, this one it's more of a market share opportunity. It's less likely to, companies are less likely to take a big hit if they don't offer healthy food, but it is an opportunity to drive sales. And the magnitude, high, medium, or low, probably depends on the restaurant's customer base and location and other factors like that. So how we compare company performance depends on the industry. Fair labor practices is a topic for hotels and lodging, restaurants, and cruise lines, but the metrics that we use are somewhat different, although there are some similarities. Again, the red box shows how for all these industries we do look at the average hourly wage and the amount of legal and regulatory fines and settlements. However, for restaurants, we also need to consider employee turnover rates and the amount of tax credit for hiring through enterprise zone regions. These are areas where companies can qualify for subsidies and it's uncertain if these areas will continue, or possibly the requirements to qualify for the tax benefits might become stricter. So companies that are less dependent on these tax credits might be able to mitigate the risks from changing regulations around these enterprise zones. Cruise lines, we're also looking at the percentage of seafarers working maximum hours. Keeping passengers safe is really important for a cruise ship, of course, and when the crew is working overtime, they have a harder time doing that. And also percentage of seafarers paid for overtime. This slide is just an example of the type of analysis that might be possible with better reporting. For media production and distribution, we have the topic of media pluralism, which looks at both in front of the camera, what is the content diversity, and behind the camera, what is the breakout of diversity in the people producing the media. This is an example of during the Olympics, covered by NBC, 45% of the athletes were female, which was the highest percentage ever. 55% of the audience was female, but of the NBC commentators, only 26% were female. So if there were more female commenters, they might have been able to reach a broader audience. Anyway, this is an example of the type of disclosure that would be possible, or the type of analysis that would be possible with better disclosure. So during our consultation period, we've realized that some topics and metrics might need further input from stakeholders or additional research. And to identify these topics and metrics, we've looked again at the public comment period letters, documentation from the Standards Council, notes from calls and meetings that we've been having, and we've also been reaching out to subject matter experts. We welcome additional feedback on these items in the hypothesis for change. This is a sneak preview of some of them. For restaurants, we can see that the standards need to evolve as the issues evolve. So under the supply chain management and food sourcing topic, we're proposing to add a metric on antibiotics in the meat supply chain. Antibiotic use is facing increasing regulatory scrutiny, and consumer awareness is growing. So we think this would also be something that investors would care about. Here's an example of a recent article in the Washington Post discussing this topic. Other examples from the hypothesis for change are the metrics for casinos and gaming and media production and distribution. So initially, we had the number of online gaming accounts as a normalization factor or activity level metric that could be used. But in consulting with subject matter experts, we realized that we need to be more clear about what that means. And actually look at active customers. Companies may have online accounts that are never used, so we wouldn't want to count those the same as accounts that are used all the time. So we're proposing to change that to number of active customers and then define what active customers means in the technical protocol. For media production and distribution, previously we had asked about total recipients of media in the US, but to reflect the global nature of many media companies, we're proposing to change it to total recipients of media broken out into the US and non-US markets. We think that will provide investors with additional valuable information. And now I'll turn it over to Michael again.
Thanks, Sonya. So I'm going to go into a little more detail on where we are in our process. And I want to remind everyone that the slides and recording of this webinar will be available afterwards, and also to, again, please submit any questions you have along the way. We had put out our governing documents for public comment back in April. We received responses from those and are currently finalizing those documents, we hope, for publication by the end of the year. In the coming year, we're going to be seating our Standards Council, which will have top-level responsibility for setting the standards, the agenda, and will make the final determination on approval of the standards that we will put forward to them. That Standards Council will be overseen by a board committee of SASB, the Standards Oversight Committee, to handle governance issues or due process challenges. We, however, also very much view this process as requiring engagement with issuers and investors on the standards themselves, on the hypothesis for change, and then that feedback we will incorporate into what we present to the Standards Council for approval. So in this process, we are testing the materiality and decision usefulness of the standards, the cost effectiveness of the standards. We anticipate running a cost-benefit analysis with an outside provider over the coming months. We're continuing conversations with folks that we've been talking with already, and also hoping to hear from those that we haven't yet. So we'd encourage you to get involved in this process going forward as we evolve the standards to their initial code. SASB has a number of advisory partners we work with to help on questions around the standards or implementation. And although, of course, we publish the standards and anyone can go download those on our website, we also have other resources available for engaging with the standards and engaging with SASB. And we'd encourage you to visit our website and take a look at those. So as we mentioned, we are now open for business. Please do head to the services sector website on the SASB website and sign up for the mailing list. Follow us on Twitter. We will be reaching out to you for getting feedback on the provisional standards and the hypothesis for change. And I'd also encourage you to look at the first SASB symposium happening December 1st in New York City. That's going to be a great event with speakers from across accounting, legal matters, sustainability, and the corporate world. So we'll have Mary Shapiro from the SEC, Tom Quaidman from the Chamber of Commerce, Baruch Lev from New York University speaking. It's going to be a really wonderful event. So now we're going to get to Q&A, and again, I'll encourage you all to have questions. So we have our first question. When will the final standards be issued? I'll take that. We are in an active process of putting a schedule out with our board right now, and we would hope to have that schedule made public in the next couple months. We should even sooner than that, I would hope, but I want to just make sure that I give us enough time to iron any details out with them. All right, next question. What kind of environmental life cycle analysis was conducted for determining materiality, or were these based solely on financial risk?
So SASB's definition of materiality, as Michael mentioned, is the U.S. Supreme Court's definition of materiality, and it really is focused on investors. We recognize there are other stakeholders that companies may want to provide additional information to, such as their customers or their employees. So the place really for an environmental life cycle analysis or kind of additional reporting above and beyond SASB would be the company's sustainability report or corporate social responsibility report. We are really trying to focus our standards and metrics on what is material to investors because our standards are designed for the 10K.
Thanks, Sonia, that's great. So we have a question here. I'm going to reframe it a little bit, but so SASB's use of metrics identified do not offer an interpretive position on those metrics. That is, We don't say what's a good number or a bad number, and then so the question is it up to investors and observers to make their own determination for what's acceptable performance in these areas? And yes, that's exactly right. We're not here to make normative decisions about what is considered good performance or bad performance. We are a standard-setting organization providing a structure for companies to report on these issues and for investors to get comparable, standardized information on these topics, and then they can make their own determination on whether companies are doing well, badly, or indifferently on those issues. Great. So we have another question. For professional services, you did not indicate that energy was material. However, travel is a large budget item for many professional services organizations. So how did that determination on materiality with respect to those entities, how was that made?
That's a great question. Thank you. So when we look at developing the topics and metrics, we're trying to pick those that would apply to companies across the industry. And actually, when you look at the composition of companies within professional services, the large majority of them are staffing organizations, such as Manpower Group or Kelly Services, and travel would not really apply to those companies. So definitely it can be a material issue for consultants who are part of professional services, but for the industry as a whole, we did not think that that was material. A general point is that if a company is in the professional services industry and they identify additional metrics or topics that would be material to their organization, we encourage them to go ahead and report on those as well. The SASB framework is kind of a starting point for determining materiality, but the ultimate determination is up to the company.
Thank you for that. Great. We have a question here. What is the current status of SASB's engagement with the SEC? I'll comment on that. We have, obviously, Mary Shapiro is the vice chair of our board. Lise Walter, former chair of the SEC, is on our board. Alana Peters, former SEC commissioner, I believe, not chair, but commissioner is also on our board. So obviously we have people with deep experience in materiality and how these things are evolved in government structures involved in SASB. We keep the SEC apprised of what we're doing, and we have no further insights beyond that with respect to what they may or may not do with regards to our work. I will note that the SEC put out a comment letter on Reg SK earlier this year, Reg SK being the rules of disclosure for U.S. corporations. There were about 350 pages in that, about a dozen or so pertaining to sustainability issues, and yet about 2/3 of the letters they received in response to that dealt with those 12 pages around sustainability issues. So the SEC may feel they need to say something about this, but again, we don't have any particular insights into that. Great, next question. Why is workforce diversity only featured in certain industries and not others? Sonya, do you want to jump in on that?
Thanks, Michael. So workforce diversity is, can be an important issue for many companies. And again, in order to determine if we should include it in some industries or all industries, we really go back to the Supreme Court's definition of materiality. So for the industries where it is included, the professional services, advertising and marketing, and then it's also part of media pluralism for media production and distribution. We've seen in those industries that it's particularly important. Clients are diverse, firms serve a diverse client base, and having more diverse employees can help them better meet their customer needs. In industries such as hotels or cruise lines, Typically, there's a lot of low-skilled workers, and the workforce is already fairly diverse. So that's really one of the strengths of SASB's approach is the industry specificity, where we're not asking companies to disclose hundreds of topics and metrics. We're only asking for the most important ones for their industry.
Great. Another question, where can I access the examples and research that are behind the standards? On
SASB's website, on the services page, there are research briefs which have been compiled by our whole team through research and consultation, expert interviews. Those provide lots of great examples of how our topics can impact the company's income statement or balance sheet or cost of capital. We also have our updated standards navigator, which is going to be launching soon. That's a really handy way to pull up all the research as well as compare topics and metrics and disclosure across industries.
Great. We have a question here. Have you published a list of SIC or NAICS codes that you consider part of professional services? I'm going to take that one. We haven't published a mapping between the sustainability industry classification systems, industries, and other frameworks, but that's an excellent idea, and we'll look to see if we can do that. Another one, how can private companies engage with SASB? Are these standards only for public companies?
Private companies are more than welcome to use our standards. Companies outside the U.S. are more than welcome to use our standards. They were designed for publicly traded companies within the U.S., but we have looked globally in collecting evidence and doing our research. So certainly a company might want to take a look at the standards for their industry and start measuring and tracking SASB metrics and see if they can better manage these issues now that they're measuring them.
Great. One more, going back a little bit, can we better explain how the metric example of the changes in menus would affect financial adjustments? I'm going to just add a little bit of a note to that, which is that in my mind, if I were analyzing a restaurant company that was implementing a new program that introduced, healthier food options to the menu, I might look to how other companies have seen their sales or revenues or market share respond when they've done that recently or in the past couple of years, and look ahead to say, okay, is this something where this company might have grown revenue 3.5% next year? We can maybe expect it'll be 3.8% or 4% instead because of the change to the menu options. So that's how I would approach that that question. Sonya, is there another way you might look at that, or is that pretty much in line with what you would think?
I would expect that that's the most common approach for an analyst to take. Again, there's a lot of uncertainty about how sustainability performance will affect financial performance in the future. No one can predict the future. So if you're ever in doubt about how to adjust a company's financial statements to account for sustainability, kind of a fallback, if you weren't sure about the 3.5% to 3.8% adjustment, you could maybe tweak the cost of capital just a little bit. That's a kind of generally a helpful way when you're not sure how sustainability performance will affect financial performance, a helpful adjustment to make.
Great. That sums up the questions we've received. I want to thank everyone for participating and for providing those questions. Once again, the slides and recording for this webinar will be available soon afterwards, and we look forward to your participation in this next phase of consultation and hope to see you at the symposium.